All right, it's Monday. I sent out the new edition of MMT Trader. We're going to talk all about the U.S.-China new trade war, tariffs, whatever you want to call it. The same exact panicky emotional reaction that we saw every single time in the past. I'm going to talk about that. Just want to let everybody know I sent out the new edition of MMT Trader. If you want to get that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. I'll send it out to you. So here we go again. Here we go again. What's fascinating, I have to say what's fascinating is if you just observe the behavior of investors. Zombies are all zombies. They keep repeating the same exact self-sabotaging, losing behavior every single time. They see a headline flash up, they panic, they get highly emotional, they sell. That's the wrong thing to do. It's always the wrong thing to do. We saw that back in November, December. Same thing, it was all initiated by trade war fears. The market had a correction. I was saying, free information, I was posting these videos every single day. You didn't even have to sign up for my report, not even as a 30-day free trial. I was saying this is a correction. You have to buy into this. I had so many people crying and whining and scared and running and quitting and everything. Really incredible. Same behavior every single time. By the way, today, market was down 500 points in the futures and right when the opening came, I sent out an email to all my subscribers, said you got to buy this. It's the same self-sabotaging, self-defeating behavior. People emotionally reacting off of a headline. They don't understand what is going on. Back in November and December, I explained to you in multiple videos, go back and look at it. I said the fiscal support is massive. It is going to sustain the economy and the expansion. I said when you look at what was happening at the time with bank credit, the acceleration in bank credit, loans and leases, the growth in loans and leases, all that stuff pointing. I said there's going to be a V-shaped bottom. We're going to make new all-time highs. And of course, that's exactly what happened. Nobody else. And plus, I said first quarter GDP growth was going to be way above. They were talking about 0.2%. And I said it was going to be probably in the 2s. It got up over 3%. Nobody else had that. But all my information and the things that I follow told my subscribers, the ones who stuck around anyway, a lot of them just whine and cry and ran for the hills. So we had this today, another one of these episodes. Right? Trump comes out off the cuff saying, hey, I'm going to raise everything up. Everybody goes crazy. Not everybody. We bought. All right? The market closed down only 66. S&P, I think, was down 13. Let me go over some numbers if I can. I'm going to try to remember them off the top of my head, but they were in the report today. Again, if you want to get that report, go to my website, pitbulleconomics.com. So the United States imports $540 billion worth of goods from China annually. We export $120 billion. So let's call it $660 billion, the total trade between the United States and China. So let's say Trump is going to put up another 15% on the tariffs, raising it to 25% overall. We'll put that 15% additional on everything, the whole $660 billion. You're talking about a $100 billion increase. That's roughly 1/2 of 1% of GDP taken off. 1/2 of 1%. And it wouldn't even be that much, but I'm putting it on the whole ball of wax. $660 billion. All that we export to them, all that we import to them. Now you have to remember, or maybe you don't know this, that in the last year since Trump announced those tariffs initially back last February or March, whenever it was, capacity utilization in the United States, total industrial capacity utilization gained a full percentage point. Now you might not think that's a lot, but that equates to about a 15 billion increase in GDP. I mean, percentage-wise, it's not a lot, but that was only a 1% increase in capacity utilization. Why did that happen? Because the tariffs now starting to incentivize more production here in the United States. In addition, in that last year, since he started enacting the tariffs, we have seen a 200 billion increase in non-residential fixed investment. What does that mean? Companies are now doing capital investment here in the United States to bring productive capacity up to the standards of what we see outside the United States. Yes, that's true. Here, we've been lagging behind for the past 20 or 30 years. A lot of investment has gone overseas. So that now is happening. So Trump's plan is actually starting to work. You can't really see it because the numbers are small, but it's transferring some of that investment back here into the United States. That's going to offset, first of all, it's bullish for the economy. We see the economy growing. Capital investment has been a strong component of GDP. That increase in industrial capacity use, that's going to continue to grow. You know, in the 1950s and 60s, we were up around 90%. We're only at 78% now. So that's another 12%. That would be what? 12 times 15 is what? 180 billion, another 180 billion there into GDP. So things are starting to happen. This stuff is not bearish, this whole tariff thing. This is the beginning of a giant shift economically. And by the way, it's not going to hurt China either. China runs a net trade deficit. Yeah, it runs a trade surplus with the United States, but overall, it's a giant consumer, and it's going to continue to be a giant consumer, and that's good for the Chinese economy. So all this stuff, this selling, this insane selling, please, if you're zombie, keep doing it, because the money is just going in my pocket and into the pockets of my subscribers. Thank you very much. Remember, go to my report, pitbulleconomics.com, sign up for a 30-day free trial. I'm the only one who has an applied approach to MMT. I take the MMT concepts and I put them into investing and trading. Bye.